It's a way to steal 100% of your money. It's a confiscation of wealth.
Yeah.
They'll say you have $10,000. We're going to give you 100,000 in CBDC, but what they're not telling you is that within 6 to 9 months you'll have zero.
Yeah.
The purchasing power will be zero. It'll be effectively zero. So it's not a bailout. It's not a bail-in. CBDC is just an outright confiscation, just wholesale confiscation, and that's the end game. So that's what they're teeing up right now. Well, The Economist magazine put out a cover this week, basically that says the Fed has failed. Right. So now for year after year, for the last 20 years, 25 years, through Greenspan, Bernanke, Janet Yellen, Jay Powell, there's been this huge global coordinated talking point agenda that central banks are infallible. We've had some famous magazine covers before. After the 2008 crisis, we had the Committee to Save the World, which was Greenspan, Larry Summers, and Bob Rubin. We have this constant lionization of central bankers as heroes, that money printing and keeping rates artificially low is heroic behavior by the Mandarin kings that run the central bank. And now finally the Economist has admitted that it was a huge canard. It's a gigantic failure, as we've been saying now for almost 20 years, that you cannot print your way to prosperity. All of the, Stacy, for years people have been saying that the amount of people being pulled out of poverty around the world is in the hundreds of millions and billions. And I would say, well, if it's all fake money, then it's a Ponzi scheme and it will blow up. So now we've got millions and billions going back into poverty, especially in countries like the UK, where they're saying that it's been flagged as really the worst in the Eurozone. They're looking for a recession coming very soon. They've got energy insecurity and food insecurity. In the United States, food insecurity is happening for real, and it looks like it's going to happen in a big way. All over Europe, you've got food insecurity. So the principal way the fiat money fraud worked was to hide true price discovery in the commodity sector. So energy and agriculture and metals, price discovery was kept artificially low through money printing. And just a couple of months ago, we have a big commodity producer out there in Eurasia that said, you know what? I think we're going to call time on this. Now we're entering a period of commodity price discovery where commodities are going to go up, 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 and everybody tied to the paper money world will become increasingly more impoverished. So you had commodities were big in the 1970s, then starting with Reagan and Thatcher, you had paper money took the place of commodities from the early 1980s up until 2022. So that's a 42-year period when paper ruled over commodities. And in 2022, now we're back to commodities ruling the global economy. And the ultimate commodity is Bitcoin. It's the fastest horse in the race, as Paul Tudor Jones has called it. That's still true today as it was 3 or 4 years ago. So if you love commodities, you are going to be ecstatic about Bitcoin because it's the ultimate synthetic digital commodity. It creates infinite demand amongst human beings. So there's a psychological commodity crossover Bitcoin and the human psyche. People, once they start buying it, like Michael Saylor and others, they can't stop buying it. So that's a psychological aspect.
The negative value placed on oil, at least for a day. Things like that don't make sense if we're disintegrating and, warping through to a new Big Bang situation and our whole entire fabric of our monetary universe.
Right. We don't know what's on the other side of the Bitcoin singularity.
Yeah.
So people are buying it. It creates infinite demand with Bitcoin, and we see that with a few people that are simply just going to keep buying it no matter what. And that's spreading all over the world, and it leads to the hyper Bitcoinization. It leads to a global Bitcoin standard, and it leads to the collapse of fiat money and kind of the abandonment of gold in a lot of ways.
Yeah.
So what's on the other side of the Bitcoin singularity? We can only speculate. In my view, it's the big global orgasm of hard money, which means all of our subconscious and unconscious minds fuse together in what I call the monetary G-spot. And that's what's on the other side of the Bitcoin singularity. That's how I see it. That's what I think will happen. We're going to have a love explosion. So the bond market dropped so far. It's about $8 trillion worth of value has been evaporated in this bond market sell-off. And you've got, if you look at previous bond sell-offs, going back to a big one back in 1993 when the bond markets were down 3.5% or so, that was considered a very big wipeout in the bond market. This is more than double on a percent basis. It looks like there's room to go on the downside. The 10-year treasuries at just under 3%. That's up from 0.6% just a few months ago. The 30-year is also inching up. Mortgage rates are in the 5.5 to 6 range. That's up from under 3. So rates are telegraphing that the bond market is starting to fall apart. And of course, the central bank is saying, we're going to raise rates. You can't taper a Ponzi scheme. And the game is that they hope that markets will come down to a point where there's panic and then they can launch QE5 and bail everybody out. Remember 2008, all the banks around the world had, let's call it $20 trillion worth of bad debt that they couldn't sell. There was no market for it. They'd accumulated it for the fees that it was generating and the huge bonuses they were getting. So they put all that bad debt on the balance sheet of the central banks in exchange for fresh treasury bills, and they just recapitalized all these sick, dying banks. Now the central banks, 12 years later, they are now suffering the same fate. So now they have probably 150 trillion, if all is counted, in really toxic, unsellable garbage debt. So now they're going to have to roll that into a super global bank, maybe the IMF's, to roll all this bad debt into. They have the CBDC, the central bank digital currency. That's relatively new. When we first started talking about it, there were no central bank digital currencies. Stacy is of the mind that on one of these long weekends that we used to see all the time back in 2008, when the bankers were rewriting all the financial regulations on the fly and like turning Goldman Sachs from an investment bank to a savings bank overnight, thus qualifying it for huge bailouts and doing things like that with no congressional oversight and just writing checks willy-nilly. We'll come out of a weekend and it'll be, oh, by the way, your deposits at the bank, your local bank, you had $10,000. Well, now it's $100,000, but it's a CBDC. That money you had in there is gone. It's this new CBDC. It's in there. We gave you 10 times the amount that you had. But that's the beginning then of this new way to control the economy and the banking system with CBDC, which is surveillance money, which is obviously going to bring in a more draconian surveillance state into the economy, and it would have things attached to it like an expiration date. So here's $100,000, but if you don't spend it by a certain time, it'll expire worthless, like a frequent flyer mile. In the old days, under mercantilism, countries were competing with each other, and but the new phenomenon, really, starting with the 80s, was the coordination of the fraud on a global basis.
True.
And so that extended the fake bond rally for decades beyond its natural business cycle. But now it's at the end. So now all the central banks will collapse simultaneously, which is, we've never, ever seen anything as globally catastrophic. The one data point you look at to find out exactly what's going on is the Japanese yen. So the Japanese yen, because of quantitative easing, which was invented in Japan, Japan has always been what's called a funding currency. It's where every single country and every single hedge fund goes to borrow money at virtually 0%, and then invest it immediately into a higher yielding currency like a euro or a dollar, and you capture what's called the carry trade. You could get 2 or 3%, which doesn't sound like a lot, but when you're borrowing it close to zero or at effectively zero, and you can borrow infinitely, then you can turn that 3% into an annualized rates of return or 50 or 60%. Now you're doubling your money every 2 years. Okay, so that's Japan's role, has always been the go-to place to borrow money. And right now, the yen is seemingly out of control on the downside, which means that the ability to maintain that global go-to open spigot of free money to fund this global Ponzi scheme, at the moment, it appears under extreme stress. If that cracks, I'm saying if that cracks, if the yen suddenly on Monday morning, you read the paper and like the yen has cracked badly and it's just absolutely falling apart, then that would be like a Krakatoa.